Morning, folks. It always intrigues me when I see the three stages of a market decline or correction. The first one's kind of bullish. Everyone's sort of buy the dips and the market drops a bit. You've seen that before. The second is when the market starts turning really negative and you see the news reports on stock market crash or correction. You'll see it all over social media, on X and on YouTube, that the market is correction. We're all doomed. It's going down. And the third and final phase, which is probably the most interesting, is when the CTAs and the CMTs, the hedge fund managers, and I know quite a number of them, start looking at the positive side of the market and saying, well, maybe we'll find a correction here. Maybe there are some dark pools just under this level. Oh, look, I spotted a dark pool. Oh, the hedge funds are buying calls on SPX and NASDAQ and so on. We've seen that this week. A lot of CTAs are saying, this is terrible. We'll have a look at the charts quickly. And yet, they're starting to look for some hope in these markets. The truth is, these markets look absolutely abysmal. And the CTAs and hedge funds and so on, who have been forced to buy at these levels because the algorithms sort of give them the instructions, or it's automatic, one of the two, and they see their positions and their bonuses dwindling away, frittering away, not even frittering really, rushing downwards. And we see this sort of thing on the market. This is what you call blood on the dance floor and panic setting in and capitulation. Now, capitulation is not always a bad thing, and sometimes it means we're near the bottom. With all of those thoughts in mind, I'm telling you that I have no idea what's going to happen next, but let's have a quick look at some of these instruments that we trade and go through them. So here's the NASDAQ, almost 100% retracement back down to that swing low. We haven't broken that swing low yet. We closed that little gap in the middle, which I talked about in the last video, pretty easily. And instead of bouncing off here, reclaiming the 20-period moving average and the trend line and the channel, in fact, the opposite happened, and it was free fall Friday. You don't often see them despite the sort of the meme, but this was truly a free fall Friday. So where do we go from here on the NASDAQ? Well, I suppose we're going to test that low. We have a shaven head candle bottom here, so probably a little bit more downwards later on in pre-market or when the market opens tomorrow. But certainly I think we'll test that bottom and probably exceed it and then retest this order block down below us. So do expect to move to test 19,000 and break below there, potentially just briefly, and then even down to 18,400. So that's the NASDAQ. We'll be playing this by ear, or by beer, as they say in some countries. This is the S&P 500, a little bit more hopeful. Again, a gap fill over there, as you saw. We pointed that out on Friday. And then this chart's almost identical. Instead of reclaiming the 20 and the channel or trend line top, and this tweezer top over here, we crashed down. But the interesting thing about the S&P is that we got down to the 78.6% Fibonacci retracement. I'm not saying and or expecting that this will hold, but if it did, it would be super interesting. And I think this is what the CTAs are talking about. It could even form a tweezer bottom here and then rally up without even testing lower. I think that's probably less likely. So a couple of things on here. We're still long on Tesla. Actually, Tesla held up pretty well considering the carnage elsewhere, holding the 20-period moving average, and that's about all you can say for that, but also rejecting from the 200. Let's look at Bitcoin. I put a tweet up earlier this morning, very, very briefly, just to show you what's going on. We've got a potential breakout of this short downward sloping trend line and a pullback down to the trend line yesterday and a little bit of a bounce from there so far. I took another tiny tranche there on my long-term account, but I want to look at the 4-hour chart just to show you this looks a little bit hopeful. There's the trend line, respected it perfectly. 4-hour candle reversal, and we're heading higher. Now, the danger above us is, of course, these resistance levels that we've got to get through. First of all, the 20, then the 200, and ultimately, we've got to get above this long-term falling trend line, which was set at the beginning of the year. So there we go. That's Bitcoin. Ethereum, XRP will follow suit. We're also short on gold, but long on silver. I'm not going to go into detail. I will do this in more detail on Monday in my longer technical report. But our last short tranche was taken here at 30.80. We're just easing into this very, very gradually so far. These are smallish positions, but we have a long position on silver, and that's looking pretty good as well. Held that trend line despite retesting it on 3 occasions. We've now sort of reclaimed it. I'll have to redraw that trend line at some stage. I'm just trying to give you a précis of what's going on right now. This is just a summary. You folks have asked for it, just these quick updates in between the longer form updates. Let's go across to currencies. We have no position on the euro or the pound, but we are short the dollar yen from that red arrow. And that looks quite good. We have an outside bearish engulfing and tweezer top candle on Friday. Incredibly bearish, also tagging the 50 and the 200-day moving averages and that Fibonacci retracement level, the 38.2% of the move down. So what's going to happen next? I think we should retest the 20-period moving average and start moving down. My overall target for the dollar yen is down into the 130s and then ultimately the 120s. Something along these lines. I don't think we'll follow that angle down. We could, but something down into this sort of region down here, which is where the dollar yen naturally likes to rest. We talked about Bitcoin, the other crypto and metals, so we won't go on with that. Right, and now natural gas. Well, I got a lot of flack on X about natural gas, particularly when I hedged the short position with a very tiny straddle of only 11 cents. And, well, as luck would hold it, We rallied up a couple of hours later, burst up through that trend line, through the 20, through the 50, through the 200, and now we're just testing the 100 period moving average here on the 4-hour chart on my Black Bull broker. Let's have a look at the day chart. This is where we got faffed around. A lot of people got trapped to the short side. A lot of people got trapped to the long side. This is a classic sort of one up, one down reversal trap. If you imagine this on a longer term chart, people getting trapped to the top side on the rally, getting trapped to the bottom side on the dip or the decline. And we got people going long, going short. And for those that didn't hold on, who got stopped out and got messed around here, don't worry about it too much. We're now rallying up. We're still looking for short positions on natural gas. And we're testing the 20-day moving average right now. So the open will be very interesting tonight. I don't expect a large gap, and there wasn't any rollover gap of any sort or of any note. So we're equally hedged, essentially out of the market, but we do have a long position and a short position. I like being hedged in circumstances like this so that I can be flexible and I can start to angle my position one way or the other as the market moves. I don't have to unhedge in entirety either. I can reduce my hedge position on the long side, I can reduce the short side, and whichever way the market seems to be moving, I can start to fractionally adjust my hedge in that direction. So I'm very happy with that trade right now. We're also short on Brent crude oil. We're trading WTI, not Brent crude oil itself. We have two tranches, one short there, one short there. Once again, a classic move up to the top of the channel, this red resistance and support line, and the 50 and the 100-day confluence right there. And we rejected sharply, forming almost a sort of a double top over here, that one slightly lower. We've now got a bearish engulfing and shaven bottom candle, so it's all looking good for a move down. Next target, the 20-period moving average and or this red line above it, and then down into these further bigger and deeper support levels. VIX and 10-year yield, well, VIX is obviously spiking up, but not as much as you expect. Now, let's just quickly scan across to those stock charts and see what we see here. Quite brutal, but when you go across to the VIX, you don't see anything like that. Just a little bit of a rally up to the 20-period moving average, and overall, not very dramatic or anything of the sort, like we had that last time during the yen carry trade. So this seems to imply to me that unless things are just starting to get going, which they might be to the downside on the markets, that we're due for a massive sustained crash. But if that's not going to happen, then this might just start ticking lower. What interests me is that despite these moves in the market, we've only had that tiny little poke up on the VIX. So maybe things are not as bad as everyone thinks. Nevertheless, it's not time to catch falling knives here on the NASDAQ or the S&P. Forget the other stock names. Let's just focus on the indices for now. Wait for a reversal. These basing patterns could take days. They can take weeks. So don't rush into it. Alternatively, we might get a sharp V-shaped recovery. Or, as it stands right now, the more likely scenario is a further move down in the NASDAQ and the S&P and stock names. And because we're long on the NASDAQ and the S&P, I'll be forced to hedge. And that's it, folks. Enjoy the rest of your Sunday. Next week, I'm launching my natural gas course. Make sure that you visit one of the links below and visit my website. Put your name into any email box that you can find because there are early bird discounts and limited numbers of that. And if you don't want to join the natural gas course next week, subscribe to this YouTube channel. It's free. There's a button below, and I'll see you in the next video. Take care.